Ever wondered which Russell 2000 index fund performs the best? It's about discovering the power of small-cap stocks, encapsulated in a Russell 2000 index fund, a financial vehicle that houses 2,000 of the smallest companies in the Russell 3000 index. Comparing different funds allows us to dissect their performance and identify the best, as well as what are the crucial differences that impact performance and whether or not they earn a spot in your portfolio. Today, we'll find out which of these four funds, Schwab Small Cap, Vanguard Russell 2000 ETF, Fidelity Small Cap Index, and Shares Russell 2000 ETF, emerges as the best choice. First up is the Schwab Small Cap portfolio. This portfolio started with a modest initial balance of $10,000. However, over time, the portfolio has shown a robust growth, with the final balance reaching a remarkable $34,090. The compound annual growth rate, or KGR, stands at a sturdy 10.53%, demonstrating at least it doesn't bounce like a dead cat. When it comes to volatility, the standard deviation is 19.06%, indicating a moderate level of risk, like some relationships. The best year for this portfolio saw an impressive increase of 38.69%, while the worst year experienced a decrease of 20.42%, still less than a divorce. Meanwhile, the maximum drawdown was at a manageable negative 32.09%, although it rebounds slower than an X. In terms of risk-adjusted returns, the Sharpe ratio is 0.56 and the Sortino ratio is 0.85. These figures suggest a satisfactory performance given the level of risk taken. And now, let's take a look at the expense ratio, a crucial factor to consider while choosing a fund. The Schwab Small Cap portfolio boasts an expense ratio of merely 0.04%, making it a cost-effective choice compared to many other funds in the market. Almost like going to Puerto Rico. Hot diggity dog. With an expense ratio of just 0.04%, this fund certainly seems cost-effective. Moving on to the Vanguard Russell 2000 ETF. Starting with an initial balance of $10,000, the Vanguard Russell 2000 ETF would have grown to a handsome $34,016. This represents a compound annual growth rate of 10.51%, quite a respectable figure, unlike some people. The fund's performance is not without its ups and downs, of course. The best year saw a growth of 38.76%, while the worst year recorded a drop of negative 20.49%. But don't let that scare you. Remember, investing is a long-term game, like flinging dead cows over the walls of Constantinople. The fund's standard deviation, a measure of volatility, stands at 19.06%. This suggests that while there may be some swings in the short term, the long-term trend is positive. The Sharpe and Sortino ratios, both measures of risk-adjusted returns, are 0.56 and 0.85 respectively, indicating that the fund has managed risks well. The market correlation of 0.90 suggests that the fund closely tracks the broader market movements, and the expense ratio? A mere 0.1%, making it one of the more expensive options, play to its competitive advantage in telling you what fund not to pick. Now let's look at the Fidelity Small Cap Index portfolio and the iShares Russell 2000 ETF. Starting with the Fidelity Small Cap Index portfolio, it's a solid option for investors looking for exposure to small cap stocks. With an initial balance of $10,000, this fund would have grown to a final balance of $34,483. That's a compound annual growth rate of 10.63%. Now, doesn't that make you want to donate to your own foundation? Not too shabby, right? The best year for this fund saw a return of 39.02%, while the worst year dipped to negative 20.27%. The maximum drawdown was a little over 32%. Blah, 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 pretty similar. As for risk-adjusted returns, the Fidelity Small Cap Index portfolio comes with a Sharpe ratio of 0.57 and a Sortino ratio of 0.86. This tells us that the fund has been reasonably efficient in generating returns compared to the level of risk it assumes. Now, remember when I mentioned expense ratios? Well, this fund boasts an impressive expense ratio of just 0.025%. That's the lowest you'll find in the industry, which can make a significant difference to your returns over the long run. You can also see that demonstrated in the back test. Doesn't that want to make you do a backflip off your private yacht? Let's move on to the iShares Russell 2000 ETF. This fund turned an initial $10,000 into $33,843. It also had a compound annual growth rate of 10.46%. Its best year saw a return of 38.69%, while the worst year saw a decrease of 20.48%. The maximum drawdown here was a bit higher, at 32.29%. The risk-adjusted returns, as indicated by the Sharpe ratio of 0.56 and Sortino ratio of 0.84, are also quite solid. However, the iShares fund's expense ratio is notably higher at 0.19%. That is not very plus ultra. While the Fidelity Fund boasts the lowest expense ratio, the iShares fund's expense ratio is notably higher. Now that we've looked at the four funds, it's time to compare them. Each fund is a small-cap growth-focused portfolio with similar performance metrics. The Schwab Small Cap, Vanguard Russell 2000 ETF, Fidelity Small Cap Index, and iShares. Russell 2000 ETF all have consistent compound annual growth rates. It's all about the price you pay, at least in this case you know that up front. However, if we turn our attention to the most important differentiator, expense ratios, we start to see some differentiation. The Fidelity Small Cap Index portfolio edges ahead with the lowest expense ratio of 0.025%, followed by Schwab Small Cap at 0.04%. Vanguard Russell 2000 ETF comes in at 0.1%, while the iShares Russell 2000 ETF has the highest expense ratio at 0.19%. While all four funds show strong performance, the Fidelity Small Cap Index portfolio stands out with the lowest expense ratio, potentially offering the best value for investors. Remember to think of the humanity and subscribe.